The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, right here at TFNN.com. Also coming to you live on Tiger TV, on TFNN.com, on your mobile phone at TFNN.mobi, and live inside the eSignal platform. And let's check out where the markets are at right now. We got all sorts of activity going on, and hopefully we've been able to take advantage of some of the market movement. Not as busy, but some markets definitely have a little bit of activity going on. Like I said, we got earnings season and everything else. We got the S&P, it's down 11 points right now. We got the Russell's down 10. We got the Dow still moving triple digits, down 111. Nasdaq currently down 13 points on the day. We'll get on over at gold. Gold is currently up $1.80, and so a little bounce off that recent drop. We got copper in negative territory, down 0.0395. Oil is currently down 31 cents on the day. And going on into natural gas, down 0.029. Corn's down $4, $4.25 right now. We got soybeans down $14. And bonds still in positive territory, but the dollar index in negative territory today. Looking on over at euro dollar pushing on up 46 pips. We got the euro yen up 49. Euro pound is up 79. Pound dollar currently up 75 pips on the day. And pound yen is, let's see here. Pound dollar's down 75 pips, so I got that backwards. We got the pound yen down 117 pips. And we got the dollar yen is currently down 9. Looking at over at Aussie yen, it's in positive territory, up 18 pips. Aussie dollar is flat, unchanged on the day. Looking at over dollar frick down 14, and dollar CAD is down 4 pips on the day. All right, that catches you up on the current market wrap and lets you know where everything is at. Okay, so that gets you your lunchtime update. Let's go ahead and check out what are some of the top news stories from the day, what's going on. And we'll dive into, a few other talks. We're going to talk about, earnings a little bit. We're going to talk about seasonality. And we may even talk about a little bit of hedging on binaries. Let's see what all we can get to during this show. Jobless claims moving on down, hitting a massive low, 4-decade low. So again, massive low. We got moving on down 255,000. And we go down. I mean, you can load it up. You can check it out. And very, 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 very low number being reported. So let's just looking at the last few years here. We have not had that low of a number. Why aren't the markets flying? Well, it's not quite what it looks like. A lot of people are not eligible to file unemployment claims anymore. People are sort of dropping off. So only 255,000 Americans filed for unemployment benefits during the week, this last week here, ending on July 18th. Fewest number since 1973. So experts were forecasting 280,000. Now, don't forget, they can revise these numbers, okay? And you'll see those revisions right over here, like 297, 296, 281, 282. So they can revise and do revise the numbers quite often. So that's one thing to look at. So low unemployment is consistent with the high job openings we still see in the market. It is, however, just the weekly number, which can be volatile, and it could be 300,000 next week. Phil Davis, founder of PHW Investments, talks about it. He goes into, 4-decade low is not significant as it may seem. He's talking with Benzinga, which is a great resource for getting news and other current information. And he pointed out that, we're at the beginning of a recession in 1973. The last time the figure was at this low. That's a little scary, right? So last time it was at this low, we just started a new recession. So it doesn't necessarily reflect the state of the economy. If anything, Davis says the fewer than expected jobless claims are an indication of a weak labor market. There may be fewer people being fired because fewer people are seeking jobs and being hired. Historical lows in labor force participation and weak job growth in June. With regard to the continuing jobless claims, he notes that, it was meat, but it was still, quite high in historic terms. He also said that the fact that there are fewer people on unemployment benefits isn't important unless the quality of jobs created is improving. The wage growth has to go up, full-time jobs, on down the list. So, anyways, what I found about that entire article most interesting was the fact that the last time the numbers were this low was right as the recession of the 70s kicked in. We got crude oil just keeps dropping. Hammering energy stocks, going on down to the $48 level, moving on down to $48. And so we're seeing just a massive, stocks crashing back in 2012 lows, same time this happened. And, there's some great stuff over there on Zero Hedge. Going on in and looking at, gold, pairing its gains as U.S. data takes pressure off dollars. Dollar index cuts down a little bit after the jobless claims. The U.S. Mint gold coin sell surge picks up. Chinese demand picks back up. Remember, the Chinese dropped off a ton of gold, and that is the biggest factor in what made it drop down. Now it's starting to pick on back up. Let's see. We got natural gas supplies came in today. We had that report come in right over here. Let's look at it and check it out. So right here, natural gas storage came in at 61. British Thermal Units there came in at 61 on expectation of 71. And we can dive even deeper into the report. Go right over here. You can click right on the latest release, and you can actually see the number and see, how big of a difference is that? What does it mean? And like I said, if we go over here, it's like, okay, it came in at 61, and we go back and look at the report. That represents a net increase of 61 from the previous week. Stocks were at 622. Higher than last year at this time, and 81 BCF above the 5-year average. So basically, it's really high. Even though the number is lower than expected, it's actually still an increase for this time of year, and it's still an increase in the storage. So anyways, but nevertheless, with that, we see a massive change in natural gas price. And so, anyways, a lot of movement. Natural gas is a great thing to trade. It's a great thing to go in and trade on Nadex. You could trade binaries on it. You can put strangles on it right before the report comes out, or straddles on it. If the premium's through the roof, you can go in and you can do an iron condor or maybe an iron butterfly. I prefer condors when the premium's there. So you can also hop in and trade the release. So there's a lot of different ways you can go in and take advantage of it. But the great thing is it's there every single week to look at. Let's see some other things. 30-year mortgage rates falling on down to 4%. Let's see here if I can get this one. Let's see, that one did not pop up for me. Anyways, they were down to 4.04%. So moving on down there. And then we got the Greece recession kicking in. Faces recession warning as bailout talks set to open. They've already been in a recession. They've had people pull their money out of their account. But they've been withdrawing money, like crazy ever since they get a chance to. And those bailout talks are starting on up. All right, that gives you today's top news stories. Let's go ahead and let's check out some charts. Let's do a little chart review time. And let's see what we can see this happening. Right now, I got the NASDAQ on up. And let me zoom in a little bit more for you. Moving on over here. We are currently, we moved up quite a bit. We're down right now to a negative 0.5 deviation level. And let me add in my ruler over here. So go in and add in a ruler. Get that going. Toolbar shortcut makes things so much easier. And let me just add in the deviation so I can check out the high to low while we're going through the process here. So, because I like to measure not only a deviation level, but also a deviation high to low. And open that up and make the levels maybe a little bit more visible for you, a little easier to see. Give it 1 second, takes a minute to load up. We've put so much data on there. I got this week's news covered for you. One thing I also want to do is I want to talk about the news that's coming up for you to make sure you're ready for next week. But there we go. We got it all covered now. And looking at the market there, we're still heading down south. We're heading right now. We're into Like I said, the 0.5 deviation level move there. We haven't quite got to a full deviation move on the day. We're at about 0.8 right now. So got a little bit further to go. We're busted into this 0.5 level. How much further can we go down? We'll find out. But it looks like we are doing so with volume. We busted through right here. We're coming on down into the lower volume ice zone. We broke through that ice level. We came on in to settlement. We bounced off of it. Not surprising right there. See that wick right there? So we got a little price action. But then the market moved on back down, and it looks like with NASDAQ still heading on south. And all you got to do is back up, pull up some magnets, and that'll help you determine more accurate profit targets if you're trying to target exactly where you're going to be going next on the market. All right, that gives us NASDAQ. Let's take a look at oil. Oil has had just a ton of movement lately. And so let me pull that on up and make sure, you know, I may need to update that. Let me see here if I got oil on the right contract on that. I was out a little bit, and I haven't traded oil as much in the last few days. And let's see here. Yep, I thought so. I was looking at like, I think we're on September. So if you haven't done this before, it's pretty simple. If you're inside Ninja Trader, you just go to Tools. You go to Instrument Manager, and when that pops up for you, what you're going to do is you're going to find whatever contract it is that you want to update or roll over. So, for instance, you can grab oil, move it over here, and move it on back. It'll put the September contract directly on there for you. Just simply clicking that. You can go ahead and you can check out other markets, make sure, you know, it's like, okay, gold, let's go ahead and move that one into September. Let's see if Nadex is on September yet. They're still on August, so we may want to also leave the August contract on for gold until that does get ready to roll. We got it right there. Okay, and then we'll go down, we'll check out one other one going, we'll check out natural gas. Okay, so again, some of these may be newer for you, maybe you haven't traded them, but just so you know, to make sure you have them on the right contracts, like it says July. So if you want to have the August contract, you just right click and then left click, and there's your August contract. So pretty simple to do, to, you know, do rollovers. And I mean, I'll go in and I'll sort of monitor stuff as I'm looking at different contracts and go, okay, I need to roll these over. And usually I do them every weekend. But I don't always get to them, especially depends on whether or not that's a market I trade often or not. And let's see, looks like we should be on December on corn. We should be on November on soybeans. So while I'm here, I can go ahead and update those as well. And just always keep your instruments. Make sure, don't just trust the auto rolls inside of different platforms. Make sure you're actually inserting the exact symbols that need to be put in. And like I said, soybeans right now, you should be on November. And one thing I can tell is looking at this on soybeans right now is like they defaulted to September. So there are some months in between there, but you need to go in and actually choose the right contract. And I'll get those updated right there. Corn, see, it has it on, you know, November, but I actually want it on December. Put that on over there. Now we have all the contracts showing that we want. All right, you'll stay there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, going back here to the Diagnostic Trading Hour. And so let's go through and scrolling through, like I said, some of the charts, getting us caught up on where the markets are at right now. We have gold over here. It is actually pushing right on a one deviation move, which happens to be right at settlement. It's moved on up to 0.986 on its recent low. So, I mean, literally just right from one deviation and again right down to settlement. Moved on up, moved up almost to a one deviation move up before turning around and heading south and doing a really nice move all the way down. Like I said, right directly into one deviation. It broke through one of the ice levels, came right down to the point of control volume area, bounced in between that, which also, by the way, was right at settlement. So made a great bounce area, bounced right off that, came back down, and right into another support area as well. So not expecting a whole lot of additional movement on gold right now. If anything, looking for it to possibly move on back up, but not looking for really a big decline. This bar is taking a long time, taking a sweet time to do much of anything at the moment right now. So anyways, watch that one carefully, but it's got quite a bit of volume it's going to have to break through, and volume is really low at the moment for it to be able to really head further south. Could set up a good premium collection trade or, a variety of other trades. If it does move on back up, then the most we really probably expect is for it to move on back up to 296.8 would be the upward target at this point. So, are there ways that you could trade that? What are some of the things that you could do if you wanted to trade that? And so let's go through a couple of those potential, methods. And give me 1 second. I will bring it up for you. And see if that works for me. Okay, give me one more second, and we'll do is like I said, we'll investigate here and put a couple pieces together of what are potential trading strategies in light of where the market is trading right now, just on this gold contract. Do we have something set up that we can take advantage of? And what I see as a potential method is to either do a premium collection trade or do it without even looking at the contracts, without even going, hey, here's what's available. I'm just looking at, and this is one thing I want to do too, is I don't usually want to just look at the contract to see what there is. A lot of times I want to look at the chart and say, hey, how would I trade this based on what I'm looking at right now? So if I go in and let's say I choose gold, okay, and let's pull up the gold binary contracts that are currently available. Let me get rid of the ones I'm not interested in. Pull that up over here. All right, so this lets me see all the different possibilities of what's out there right now. And pretty much sitting left at, we got the 130s on Fridays. We don't really want the weekly, so I can say, hey, you can give me daily, give me intraday, but don't really want the weekly contracts to check out. And okay, and nothing really there that I want. Okay, and so let me tear this off. And okay, that narrows down what is available and what I can use. Okay, so if I think it's going to stay above 1091.6, do I see a 1091? I see a 1090. Buy price is pretty high on the contract right now. That's going to make the risk real high, $96. Not really going to be worth it to me. Okay, it's just too deep in the money to have a lot of value. What about if I think it's going to go up to 1090? Let's see, 1096.7, 1098. So it looks like that's a potential target range right there. All right, so I don't like the in-the-money contract, at least on the binaries. And 1098, that has some definite possibilities. So we get 1099 is $2. I mean, that's a massive difference to those $3. $23 on the 1096. So you could do it out of the money if you thought there's going to be enough movement. You got a decent hour for that movement to happen. If I'm going to do this contract, if I'm going to do this trade, what I would be looking for, the main thing I'd be looking for on this trade is I want to get out, obviously by the time it hits 1098 or sooner. Well, if I could go in and buy this contract, I could set a, get out at $48, I'd be out of the contract in time to take advantage of the profit before it possibly oscillates back and forth. All right, so that's one trade we got, and so go ahead and check that one out, and we'll be back here in just a moment.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, I'm back here to the Diagnostic Trading Hour. And so we got that trade off there. I don't know if some of y'all took that, but we decided to go ahead and go with the out of the money contract. So moving on up, we're looking for it to move up to at least 1096 or higher. We're about half a point off of that in order to be able to take our profit on the trade and bind it down around $25, depending upon when you hopped in the trade on that specific one. And watching it just in case you see a pullback or whatever. We got an hour, which is nice. But you should already have your take profit built in. Don't wait for you to trust yourself to put it in when you get there. Put your take profit in advance, okay? Greed has a nasty habit of taking over when you start seeing that green add up. And you want to just have that take profit, like I said, in there. And, I'll be ready to, bail if I need to. But right now, seeing it, push on up, which is good. And so, in 10 contracts, life contracts there, up about $100 on the trade. We'll make about $250 on the trade. If we get, like I said, about maybe another point or so, factoring in bid offer spread on the trade is right now, what is that, $6-7. So need just a little bit more movement. And like I said, we bought the 1096. It's at 1095.32. We're pricing at $36, so we do need a little bit more movement to be able to push that on up to the 50. And there's a lot of cool little tools we could use inside the scanners. We have one of the things is you can go in and you can do a profit loss simulation. So you can say, well, what if the market hits 1096? And it'll say, okay, well, if it actually hits 1096, this will be up $6 more on the trade. And so basically it gives you a little bit, of a heads up exactly what price we have to get up to for it to actually hit the price that we're looking for. And here, let's redo that. So you got P&L on it. So 1096. And that will, basically just help you determine like how much more will it make or not, if it hits that exact price. So since we're on the buy side over here and we enter the price, then it'll tell us, hey, expected, if it moves up a little bit further, like I said, we're very, very close on getting there, but expect to make a, decent little profit on that trade. And it's just, I don't know, it's pretty simple. You just go in, you buy the contract, let it move towards your profit goal, set your take profit, sit back and let it do the rest. And it says right now, basically, if it moved up to 1086, we would be up an additional, $8 or so on the trade, which would put us right at about 43. So, which is pretty standard, that $43 number. What we'd actually be making on the trade if it moved up, just like I said, another point on it. So, feel free to practice with that and use it. But I know that we need to add that in as well, and I'll make a little side note for that. And let's see here, and let me put that down. Okay, let's see. Okay, that's gold. So we got gold covered, and I'll come back to it. We'll look at it a little bit later in the show, but let's go ahead and move on forward to some of the other contracts, as we got an hour for that trade to play out. Let's go ahead and let's hop on in, and I have my side charts up as well. Let's go ahead and look at oil. So over here on oil, and let's see what we got. Give that 1 minute to load up, and we'll just do a little bit of market review there. See what we're shooting for. Chart's taking a little bit longer than normal to load up. Okay, so they ought to be populating pretty soon. So I got a lot of information on my charts. It takes a little bit longer because I pull pure tick data out to make the charts as clean as possible. But oil right now, moving on down to the 0.5 deviation level, doing so with a little bit of volume. It's up right now. Looks like from high to low, or down right now, I guess you could say, down 0.8 deviations, coming right into the 0.5 deviation level right there. And we also have a buy support zone, which is really this entire 0.5 to 0.7 level. So we're going to come into some resistance as we hit this. We expect it probably to drop on down to the 0.7 deviation, and that would give us a full deviation move and be a bounce right off of the most recent support zone that we've had, which was quite a while back. I would have to scroll back a little bit, it looks like, to even get to it. Let's see, where did this one form? A long time ago. So that's the nice thing about having support zones on there, is wouldn't even have seen that level just looking at the normal charts the way that I look at it, without going out and plotting out all the magnets. And so this allows me to see those magnets way far back without even having to look at them on my charts. Pulls them on up. And so we're coming right in, like I said, to that support zone. It's going to have a little, obviously, battle at the 0.5 deviation level. If it's able to push through that with some volume, then we can expect it to move a little bit further down, on down to the 0.7 deviation on oil right now. And that's pretty much all we got on oil. So not a lot more happening. It's been a great day. It's had some great movement. We also got the 48 level below us. That 48.0 is going to be a pretty serious number for it to try to break through. So expect that to be sort of a battle zone if you're trying to trade it. But it's nice that it finally, after this morning where it was just doing a whole lot of nothing, just really oscillating inside this area, right in between the settlement and the lower ice level, could not break the ice level no matter how hard it tried. It finally decided to go ahead and go on down, break through settlement, come on down, and so now, like I said, it's working on down towards that 0.5 deviation zone. Let's go ahead and let's check out natural gas. We had natural gas come on out today, so we'll go in and dive into that one. See where we end up. That trade. Give me just a second. Oh man, I pulled up Nasdaq. I pulled up natural gas. We'll pull up natural gas here in just a moment. And I also, like I said, while that's pulling up, one of the things I wanted to do is I want to go ahead and dive into news with you, and so you could actually see what we need to be looking at for this coming week. Since this show, the way it airs, I won't be on till I'll be on tomorrow on the Bull Bear Binary Hour with Tommy O'Brien, but Diagnostic Trading Hour will be on Wednesday, and so I just wanted to make sure you do have the upcoming news. See, Nasdaq is bouncing right off that 0.5 deviation with let's see, got a little bit of volume on it, but just have it up right now. Again, and probably looking at it pushing right against that zone as well. And let's go in. Let's dive into natural gas. Natural gas. Let me make sure I get the right one this time. There we go. And while I'm doing that, like I said, I'm going to go over here and start getting the news trading plan ready. But it's coming on up. It's probably going to come right back into that ice zone. If we can do so with a little volume, we might pull on back up to the point of control level right there. And all right, here we go. Natural gas loading up and news trading plan. Let's dive into it. So it'll be up here for you in just a second. There we go. Natural gas moving up to a just breaking past the positive 0.7 deviation level before news. Before the announcement comes out, and actually it's plus 0.5, does a little bit of a head fake, pops up, and then pulls down, like ferociously flies on down within a matter of, that looks like a huge amount of time, but it's not. This is a mere 10 minutes. All this movement is in 10 minutes, and this is in the last couple hours. So just these last 4 bars of the last couple hours, all this is in the last 10 minutes. And so moved on down, a solid deviation move down, high to low. And I've actually busted through that a little bit. It's sitting right now at 1.3, but it is sitting at the 0.5 deviation level at a support zone. And it's sitting just above the ice zone right there as well. I said just above the ice. So we might see it move a little bit further down to 0.7, but I think we pretty much completed our move for the day on natural gas. Let's see. Let's dive in now to our news that you can use here segment. And again, even if you're not a news trader, you need to be aware of the news. Let me see what we got on the list. And give me one moment so I can pull that up, and we'll just sort of hop through it a little bit and put a few things on there for you. And I'll just pull up Forex Factory. It's a good site. There's a lot of sites out there. There's a lot of nonsense on it, but there's also some decent stuff on there. And let me see here. I thought I had that up, but let me pull it one more time just to make sure it's not me. And yeah, okay. So let me go ahead and go up and pull up Forex Factory. And then we'll go in and we'll dive into just sort of what's on the docket for next week that you need to be aware of. Okay. So going in, we got today, tomorrow. We've already covered all that yesterday on yesterday's show, so I don't want to waste your time on that. But going into the coming week, not really a lot coming out on Sundays. Very quiet, as you can see. I mean, that's probably one of the quietest Sundays I've seen in a long time. Expect quieter markets. Going into Monday, we got core durable good orders. Probably looking for a $30 to $35 euro dollar iron condor on that. Beyond that, nothing else. We are going to have preliminary GDP quarter over quarter. That could actually be a pretty decent move trade. So I'd have to go back and pull. Let's see, what was the last time? Let's see, last release was April 28th. So if I go in and pull that up, give me 1 second so I can pull it up for you. And on that release, let's see, April 28th, I want to pull off my calendar for my stats for you. And let's see what we can do. Go to my monthly view, because I keep all this stuff logged. Helps out quite a bit. And hop on back. It's been a while since the pound's released. That is obviously a quarterly number. And we got on April 8th for the April 28th for the release. Looks like not one of the biggest reports, but I still think there'd be... Okay, preliminary GDP actually doesn't have a massive impact on the pound. Looks like it's a $30 iron condor on the pound dollar. So looking for a minimum profit of $30, buying the lower spread and selling the upper spread. Let's see here. We got consumer confidence. Usually that report in and of itself, not a big mover either. And let me see if we got anything on it that might be helpful. And right here. So yeah, not really any tradable statistics on it. Going on into Wednesday, we're going to have our FOMC statement, our Fed funds rate. So I'll be on the air before that comes out, and I'll walk you through a lot of the ways that you can trade it. They'll have a statement and their rate. They are not having their press conference with it. Okay. By the way, you can actually trade the FOMC statement on Nadex. It's one of the rare known contracts. It's not, I don't really touch it. Just my perspective, I don't really see a lot of benefit there. But you can trade it, you can check it out, you can look at it if you want to. I mean, I've played with them a couple times. I never was that impressed when doing so. So I just sort of left them alone. It just sort of seemed a little bit too. I mean, the idea behind them, I'm trying to figure out how to put this in the right way. The idea behind them is that you can go in and you can hedge, maybe a position of, hey, you think the market will fly this way or fly that way. If, there is X activity happening, like if you think the market's going to fly down because they raised the interest rate, then you could go in and maybe hedge some long positions with some short binaries just in case that did happen. That's basically the idea of why they exist, why they're there. Okay. And let me see here what I can do. I might be able to pull something up here. Let's see. Yeah, okay. Let me grab the platform. And so looking on over this, like here's the Fed funds rate. Right here. And so, if you could think it's going to be less than or equal to, if you think that statement is true, you can buy it. If that statement is false, you can sell it. So, I mean, you got all these like buy and sell statements, and Nadex goes into it in a little bit more detail on their site. I'll show you that here in a second as well. Stay right there. We'll be back in just a minute.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. So I was talking about just the events, something I haven't touched on too much before. We're just hopping between some different subjects here. And I've seen a couple questions come in. How do they work? The volume is not high. The liquidity is not high. You can see there's like 10 contracts, okay? They work the exact same in the sense of they're a true or false statement, but they can seem a little bit confusing. If you think that it is true that the Fed funds rate will be less than or equal to 0.25%, when they announce it, you can buy it if there's a buy to have, which is not right now. If you think it'll be not less than or equal to, meaning it'll be greater than. So it's a little bit more confusing. Some people don't get this. Just remember, if you think this statement will be false, so not less than, not equal to, leaves what? Greater than. Then you would sell it in this case. So true and false statement. Buy is true, sell is false. So if you thought it was going to be greater than 0.25, you could sell that contract and for a $94 profit on the contract, should the Fed funds rate be greater than 0.25%. If you thought the Fed funds rate would be equal to 0.5%, okay, then if you thought that statement was true, you could buy it for $12. If you thought it was not going to be equal to 0.5%, you could sell it for $2. Wouldn't really be worth doing the contract because, you know, if you think it's going to stay the same, right? Because you'd pay $1.80 in fees, you have a $98 risk, you're going to make 20 cents, best case scenario, okay? Or you have the Fed funds rate greater than 0.75%, greater than or equal to. If you think it's going to be that high, you could buy it for $10. If you think it's not going to be that high, you could sell it. So that's going to be less than or equal to, then you can sell it and, of course, be profitable on that trade. That'd be the same thing basically as buying, in this case, 0.25, but covers a wider range. So anyways, hopefully that makes a little sense for you. And, that's what the event contracts are there for. To me, I don't see a lot of value. There's not a big enough size to do much of a hedge with. But they are there. They're intriguing. They're interesting. They make you pay a little bit more attention to some of the numbers. They also have them on the unemployment claims every week. They come out where you can take advantage of them. And so they've had a variety of them. Let's see which ones they have them on now. Yeah, they got jobless claims. They also have non-farm payrolls. So you can look at those numbers. So if you're real into calculating those numbers and trying to figure those numbers out and what they're going to be, that's something you could look at. I prefer to be a little more active in my trading. So that's not really going to, do me a lot of good to go in and try to guess out a number, because I'm not going in and digging out all the numbers. But I mean, if you're really, really good at being spot on and identifying what those numbers are for NFP and for jobless claims, and you're out there doing all the research and gathering the data, then by all means, go ahead and, check them out, demo trade them. But not one of those things. I mean, there's not enough contracts to really do a lot of size on. So like I said, 10 contracts on there being listed at any given moment. And, so you can learn about it and check it out. But it's an interesting concept, an interesting idea, with the reasoning being a way to hedge other positions. But overall, I just like to stick to the markets that, move versus a static number that I'm hoping is going to be greater than or less than, because you're not going to see a lot of bid offer change, at least on Fed funds rate, and not too much change on the unemployment claims, the NFP. But you can check those out, and if that intrigues you as being just one other way to potentially hedge, I would not make it a primary trading strategy by any means. But if you had on a lot of positions, I mean, this is the one way you could look at it. Hey, if I was following the market, I thought they're gonna they might raise rates for $6. I could have a $94 hedge. That could be a benefit. Okay. All right, y'all have a great day, and I will see you tomorrow right here on the Bull Bear Binary Hour in the morning. Stay tuned for another great show right after this.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.